Check my audio real quick. All right, so we good to go. Heard all that I needed. What's going on, y'all? This is your boy Jay the Bar, bringing y'all episode 5 of my D.N.T series. That's my Diary of a New Trader series. In this episode right here, I'm basically just gonna be doing like some live trade management. Because I did enter a position last night on the ES in futures. Um, as I mentioned in my live stream on Sunday night, market analysis Sunday night, that we do have some pretty volatile, um, high impact news events going on this week. Particularly Wednesday, tomorrow, we got the federal funds rate and the FOMC press conference. So basically, the Fed is going to be talking about whether or not they're going to decrease interest rates, and that can have whether they're going to leave interest rates the same or bring them down some more. So, it's going to be some pretty high impact news drivers going on this week, especially tomorrow. Thursday they got unemployment claims, GDP, and Friday really employment costs and core PCE. So, but the main one to highlight for this week is what's going on tomorrow, and that's the FOMC. This really trumps everything. This is the most important one right here, because this right here can really move the market up or down, right? So, also, if you're an oil trader, again, we got crude oil inventories Wednesday. I'm gonna say crude oil inventories is every Wednesday. Fact check me on that, but yeah. So yeah, so as far as today, the only thing we had in the U.S. was consumer confidence, and that actually came in um, uh, a lot less than what was forecasted. It was forecasted to have let's say like a 4 point drop based off of last month's numbers, but today they actually had more of a significant drop than what they initially forecasted. So um, I want to say that the U.S. dollar actually did end up selling off a bit today around 10 o'clock. I'm gonna go to my chart right here, and this is my trade right here. Go to the chart, see what happened on the U.S. dollar around 10 o'clock. LA 4 hour, 1 hour. Let's see what happened around 10 o'clock today. All right, so we had a little rally or whatever. And that going into that 10 o'clock hour. From a long-term perspective, I still think that the dollar is going to sell off from a long-term perspective. I still think that we can do a lot more selling off, down here in this area and in this discounted area right here of this range from this low to this high. I still think we can do a bit more selling off. Potentially take out this low right here and tag maybe an order block. So there's an order block right here. But bless. But yeah, I'm speculating, or I can see that we can sell off a bit more before we continue to the upside. Some US dollars. So now we go to trade management right here. So ES had a S&T divergence with NQ. So this low right here from Tuesday, January 14th, right? It's the same low on the ES or on the NQ. So right here on ES, the January 14th. You look to the other side right here. You see it's about the same. So that's the same low right there. Same low. Whereas, so the January 14th low on NQ. Going into this week on Monday, yesterday, NQ, it actually ran that low and went a little bit below it. Right, so it went a little bit lower than it right here. Whereas yesterday on Monday, the ES, it did not. It didn't even come anywhere close to that same low from January 14th. Right? So I'll just mark this right here so y'all can see it better. I'll mark it red. Boom, red. And boom, I'll just do it like that. Yep. So boom. And boom. Oh shoot, it ain't do it. My bad. Boom, there we go. All right, so from January 14th to Monday the 27th, right, of this week, the ES did not come down anywhere close to that low to the 14th. So this right here is an S&T divergence, right? So this basically is a break in the correlation of these assets, right? If the ES makes a higher high or a higher low, then if the ES makes a higher high, makes a higher low, then NQ as a correlated asset, it should also do the same, right? However, that's not the case. So we have divergence. So this tells me that there's some type of institutional sponsorship inside of the ES right now, right? So, and as you guys can see, that's exactly what's going on. So this candle right here, this 2 o'clock candle on Monday, this is the candle that created the S&T divergence. So therefore, this would be our change in the state of delivery, or this would be our order block right here. All right, so this is the order block or the candle that tells us that there's been a change in the state of delivery, right? So there's been a reversal, right? As you guys can see, inside of this order block, I'll just go ahead and mark it. We'll go ahead and mark it right here. So inside of this order block, right here, we're gonna do block. So inside of this bullish order block right here, you guys can see we tested inside of it, consolidated inside of it, and now we're actively distributing to the upside right here. If I go down to the lower time frame, the 4 hour, actually this is the 4 hour chart. So I thought this was the daily. My bad. I was on the daily on the dollar. So I assumed I was still on the daily, but my entry was right around here at just a little bit below the upper half of the order block right here. Up shit. Oh my god, I sold my position. Oh my god. I'm gonna close that. Oh my god, I sold my position by accident. Wow, what a blunder. That sucks. That sucks. Well, either way, it's a demo. It's a demo account anyway, so I'm not even tripping about it. I'm just practicing before I start trading in February. Before I start going hard in February with going for a funded account. But either way, it was $2,000 in profit, as you guys saw earlier. If you were here, let's see. I'm gonna go to where was it at? History. Account history. Yep, here we go. This is that position I put in last night. Had about $2,200 in profit. Either way, it's fine with me. 2 bands is 2 bands. If it was a real account, 2 bands is 2 bands. But so my entry, I was trying to move the order block up a bit, but I fucked around and actually clicked off to sell the position that I had open. But it is what it is. I can't believe I did that on live stream. Oh man. But so my entry was right around here last night. Right around here last night. want to say it was, which candle was it? This one? Somewhere in here last night. But I did end up taking a position with this candle. Yeah, it was this candle right here. This one right here. You see it kind of closed a bit. When I initially entered as a market execution order, it was about right here. And then when I went to sleep, it closed down here, and then it's doing this thing today with the market news driver that I showed earlier. We had the consumer confidence report come in today that actually came a lot less than what was forecasted. So that drove some bullish momentum inside the market right now. And why I'm also not tripping about closing out or accidentally closing out of this position is because we have this large volume imbalance right here. So when the market opened up on Sunday evening, it opened up forming an imbalance. So getting up here to this imbalance level, this kind of like concerns me a bit, because say we're going into it Wednesday with the FOMC. The FOMC isn't until 2 o'clock. So before 2 o'clock, there's going to be some type of like market volatility injection. So if we reach down into, depending on what we do today, if we were to reach up into this volume imbalance today, this is where I would kind of be like a little worried, because this could be a strong area of interest, and like we could see like a deep reversal back towards and taking out this low. That's something that I would have been concerned about, but my ideal target still remains the same, taking out this external range high right here from a monthly perspective, because this is the current all-time high right here, and we're really close to it. So this is still my key area of interest that I'm thinking that's going to get tagged. Especially with the news drivers that we have this week. However, that just remains to be seen. We can only take it day by day, So either way, free two bands, I guess. Free two bands, I guess. On the position, it was only risking about $1,700, so a bit over a bit over a 1-to-1, but hey, it is what it is. I'm gonna actually journal that a little later, but yeah. So my first target on this position would have been this high right here, and that's where I have the TP set at right here. So overall, this would have been with $1,700 of risk, this would have been about a $5,000 position if I didn't accidentally close it. But it is what it is. Maybe I could find like another re-entry somewhere later in the week, but that just depends on what happens tomorrow after the federal funds rate. And especially too, because we're making our way back up towards Sunday's opening price. Right. So Monday we had a large expansion away from Sunday's opening price, and I use Sunday's opening price as basically like a gauge of like where I think the market direction is gonna go for a given week, because I'm just looking to grab a small or some type of chunk out of the move. I don't need the whole entire move. Like, I don't need to enter down here and then hold the entire trade all the way up here. Like, as long as I capture some of it or a good bit of it, I'm good to go. Right. That's been my thought process as I've been like trading with the strategy that I learned from ICT. It's a short-term trading strategy, and a couple of the other concepts that I learned from it. I learned from like other ICT YouTube traders, that use some of his other concepts. So I just found the ones that work for me, right? And I found the ones that make the most sense to me, and I just been sticking with it since then. So I've been trading like this for about almost a year now. I want to say it's been about 10 months or so when I started trading like this. But as far as right now, with Sunday's opening price, we're making our way back up towards it. Now, like at any point after Wednesday, if we're just like teeter-tottering around Sunday's opening price, my trade plan calls for me to sit back on the sidelines and just let whatever happens happen, right? Because with us returning back to Sunday's opening price, like say I was short right here, if just somehow, some way, if I ended up being short, I wanted to sell from here at Sunday's opening price, right? Um, the fact that I see price coming back closer to that opening price, well, this tells me that there's some type of reversal. And basically, all the gains that I would have had at this with this move right here, all the gains I would have had, I would basically be losing them right now. So, um, so that's the idea with using Sunday's opening prices. Like you kind of wanna trade near it early in the week and then see a reversal framed in the opposite direction. And the minute that we see expansion either higher or lower, depending on like what key areas of interest that I'm targeting, right? Um, if I see an expansion, like in this case right here, I'm looking for this key area to be taken out. If not this week, maybe next week, right? But I'm looking for this key area right here, this all-time high to be taken out currently, right? I'm looking for that to be taken out. So based off of the price action this week, just from between Monday and Tuesday, right? If Tuesday we expand, if the rest of the day Tuesday we continue to expand and go above Sunday's opening price, then Wednesday I need to see us like just completely take off and then go ahead and hit that key level or that area of interest. And from that point, my trade idea would be basically be over with and be completed. Um, if I saw like, let's just say going into Wednesday, I saw like we had a rally. Say today it just continued to like consolidate, and then Wednesday we get an expansion upwards, and then we close back down below Sunday's opening price. Right now, at that point, we only have 2 days in the week. If it's really gonna if the market is really gonna make a run for this key level right here, there's only 2 days left in the week for that to happen, right? And that's Thursday and Friday. We do have some volatile news events Thursday and Friday, right? So that could work in our favor, right? If I still had this position open, that could work in my favor. But just looking at how it is with Sunday's opening price, I probably would have been a little funny about holding this position open because I'm not so certain of which direction it's going to go, right? So, although given Tuesday's price action alone, I'm just thinking that, or I'm of the idea that this week we should take out or make a run on this key level right here, this all-time high right here. So, yeah, if it wasn't for me accidentally closing the position, right, here's the position right here. 128 today, closed at 104. And I entered this last night. I was kind of pissed about it. I'm kind of mad about it, but like I said, it is what it is. This is just a demo account anyway. I'm just practicing until I start getting ready to go hard in February. So I'm not really too much tripping about it. It is okay. But with that being said, I'm gonna go ahead and just wrap the stream up here. I just want to do a quick little stream, just give me all like a quick little update of my trade management, given the fact that I did enter in a position last night. So yeah. So I appreciate y'all. If y'all stayed this long to watch and tune in, I appreciate it. And with that being said, I'll see y'all in the next one.